Hey everyone, guess what day it is? It's Mortgage Tip Tuesday with It's Your Girl, hashtag JLoan. I'm always so excited for Tuesdays, and today I brought to you a topic that I feel is very, very important when you are getting ready to do a mortgage. And these are my top 10 questions that I believe that you should ask when doing a mortgage. And maybe all of them don't apply to you, and that's okay, but some of them will apply to you. One of the ones I don't like to ask is, what is your APR? Now, I do agree that's a very important question because APR is the cost of getting the loan. But I feel that I have seen several not so good quotes with tons of fees that are not included in the APR. So I think it's very important for you to understand how to read your loan estimate and where those costs are and compare cost to cost. That's just me, but it is an important question to ask, but I didn't put it in my top 10 questions. And maybe more so because I walk my clients through and hold them through the process to make sure that they understand that APR is the one-time cost associated with closing your loan. But unlike credit cards, it's not something that accrues and continues to accrue over time. It's just the cost of the loan expressed as an interest rate. So moving on to my top 10 questions. Number one, I think it's important when you're starting the process to understand, what are my mortgage options? A lot of the times, and I've been recruited this way, lenders will say, we're the top FHA lender. Come work for us, which means when you go to them, most of the time they are pushing an FHA product on you, and you, if you don't know any better, you will get into an FHA loan. And not that they're bad loans, they're great loans, but if you qualify for other loans, I'm not making your mortgage payment, so shouldn't you know those options and be given the choice to make the decision that would be best for your family? So most important, if someone says, this is what you qualify for, ask them why. And is there anything else that I qualify for? Or is there a better loan? Or explain to me the difference. And it's not to make the process long and drawn out. This is one of the biggest purchases of your life. And I think it's very important that you understand your options, your choices, and if there's a better option, what can you do to get there if you don't qualify for it now? Everyone knows I am not a fan of rushing the mortgage process. At the beginning, I am not a fan of it. I think you need to be well informed to understand what you are getting yourself into. It's kind of like if someone just got married and didn't even really know the person. That may not work out well, right? It may, but it may not. So I think mortgages are the same way. You need to know all of your options. You need to be very well versed and educated on what you're getting yourself into, and then make the decision from there. So that's number one. Number two, how much down payment will I need? Back in the day, you had to put 20% down. Well, that's not our world anymore. FHA has 3.5% down. Fannie and Freddie came out with 3% down programs. Of course, they're different if it's a second home or primary residence or an investment property. All of them have different down payment requirements. And it's very important for you to know, how much will I need? The next one is, do I qualify for any grants or first-time homebuyer money? If you are a first-time homebuyer, and by definition, a first-time homebuyer is someone who has not owned a property in 3 years. So even if you owned a property 7 years ago and you sold it, or life happened and God forbid something happened in a foreclosure short sale, if you don't think you're a first-time homebuyer, you actually are a first-time homebuyer. So it's important to know, do I qualify for these grants? And is there anything I can get to help me with my cost? Even if you have the money, who doesn't want free money? It's there. So if you qualify, why not why not know about it? Okay. The number 4 question is, what will my mortgage payment be? And this is a huge, huge question because most people don't ask that. They care about the purchase price. And unfortunately, we have to work in reverse, because what if you don't want the mortgage payment that goes with that $400,000 or $500,000 home that you want to purchase? So the question I think you should always be asking is, what will my mortgage payment be? Because that will help you guide, should I be looking higher or should I be looking lower? Because what I can qualify you for, or what a lender can qualify you for, may be more than you want to afford. And so I always say, ask yourself, speak with your significant other, and come up with that budget. What is that amount of my mortgage payment that I do not want to exceed? You ever heard of house poor? That means every time you're working, every bill you're paying for goes to the house. And some people don't want to live that way, and I don't blame them. If all your hard work goes to just your overhead and you can't have any fun, you don't want to do that. And plus, what happens in case of emergency if you overstretch yourself? So be very aware of what you want, how much you want, and will your family be stressed out financially at a certain price point if, God forbid, something happened and maybe one of you lost your income? Can one of the two afford to make that payment and the monthly bills if one of you lost your job? So think about that before going into a mortgage. Number 5, am I paying any points to get that interest rate? A lot of the times you see on TV, or I call them TV rates, or you'll see them on ads, these really low interest rates. And then borrowers say, well, why is your rate so high? I saw this on the internet, or I saw this on TV. Well, in the very small print, you could be paying points. You could be paying to get that interest rate, as well as a lot of what you see on TV not only comes with points, but that's based on a 800 credit score, 25% down. I even received a quote from a borrower that told me I was getting beat out. And when I got the quote, it says this quote is only eligible for homes that were in Florida, but his home was in Texas and they still gave him the quote. So you have to make sure, don't be blindsided by just the interest rate. Make sure that you understand what comes with that interest rate. If there's cost, do you qualify? Because again, if you have a 620 and you're at 95% loan to value, you're not going to get that rate that you see on TV or in the magazine. So you need to be asking what you qualify for. And honestly, I'm going to be realistic. I've been on the broker side, I've been on the retail side, and rates really vary sometimes from an eighth to a quarter of a point. Very, very rare situations do you see it vary by a half a point. So really, I think the process is, can you trust who you're working with? Are they going to help you through the process? Are they going to hold your hand? You know, because this is a big purchase. It's scary. So that's the question you need to ask. Am I paying any points? Number 6, do I have mortgage insurance, and how long will it last? Well, if you're not putting 20% down on a conventional loan, you're going to have mortgage insurance until you get to 80% loan to value, where then you can request for it to come off. It doesn't automatically fall off until 78% loan to value. So you will have mortgage insurance on anything on a conventional less than 20%. Even if you do upfront mortgage insurance or lender paid mortgage insurance, you're paying for it somehow, right? And then how long will it last? Again, I answered that on conventional, but on FHA loans, if you're not putting 10% down, and even if you are, if you're putting 10% down, mortgage insurance will last for 10 years, right? If you're not putting 10% down, which most clients sometimes getting into an FHA loan, they're putting 3.5 to 5% down, you will have mortgage insurance for the life of the loan. The only way to get rid of mortgage insurance is to refinance your home out of an FHA loan. So it's very important for you to understand that that's a cost that is a part of your monthly payment. That's not principal and interest. It's not taxes. It's not your homeowner's insurance. This is an additional fee that does not count towards paying off the principal of your loan. So it's very important to understand that. Number 7, what should I expect my out-of-pocket to be? I do personalized quotes per property. I think it's very important that you understand the principal and interest, the taxes and the insurance. And the biggest thing that varies is taxes and insurance. Your principal and interest will stay the same for the life of the loan, but your taxes and insurance can fluctuate up and down. If I do it specific to the property, I can give you the most specific estimate to that property, as you can buy a home in one area at $200,000 and buy it in a whole nother area at $200,000, and they have different property taxes. So I like to do mine specific to the property, but for an estimate, I typically say if no one is helping you, no one at all, expect 3 to 3.5% in your down payment. And of course, you can put as much as you want down, but expect that in the front end. And I say estimate another 3 in the back. So if you're doing a $200,000 loan and no one, the seller's not helping you, you don't qualify for any grants, you're paying this all yourself, you should be prepared to have about $13,000 to $14,000 in your bank account ready to pay for this $200,000 home. Number 8, what is your average closing time? And right now, because last year, 2020, lenders went through COVID, interest rates were super, super low, and the fluctuation of business came in, and a lot of lenders couldn't handle that. And so your closing times were longer. So it's important to know if you need to close in 30 days, you need to know, can that lender close you in 30 days? And a lot of lenders, unfortunately, can't. And I won't mention any names, but we can here close in 30 days. Next, number 9, will I be updated every step of the way? Communication is very key. And if we get you pre-approved and then you never hear from us again, that's not a good way to go. So make sure that your loan officer's communication is very good and you get weekly updates on where your file is. Is it in processing? Is it in underwriting? How long will it be in underwriting? When is my appraisal due back? If there's an issue with the appraisal, are you going to tell me this? You need to know that the communication is very huge. And number 10, and again, I try not to make these videos about me, but this is where I feel personally I stand out amongst the rest. This question, after I close, if I have questions, can I call you? It's not about just the mortgage. I want you to understand that you deserve to be a client for life. And you need a loan officer that will watch interest rates for you, who will contact you if rates drop and it's beneficial for you. If you don't understand your escrow analysis, if you escrow, that she will help walk you through that. You need a loan officer that's going to say, hey, it's time to file your homestead exemption. Oh, you lost your closing CD and you need it for your taxes. Here you go. It's very important that you have that friend for life. You're not just a client, you become family, friends and family. And I think these 10 questions are super important, but number 10 is what I am so proud of, because my clients become my friends. I will stop what I'm doing to help you at any time that you need my help. And even if it takes longer than that, I will make sure that you get the answers that you need to help you make the wisest decision on the biggest purchase of your life. Again, it's Tuesday. It's your girl, #JLoan, and I will be back next Tuesday with another mortgage tip. Again, if you have something you want me to speak on that you don't know, inbox me, let me know. I love to do videos. I love to talk to you. And so, as always, I say it, be safe, be healthy, and be blessed. It's your girl, #JLoan, signing off. Have a great week. Bye-bye.